story? Does it continue to grow and facilitate manufacturing or finding the parts or really making everything move faster in the years ahead in a better way?
Yeah, so let me just start with saying that Xometry's been an AI native company, from the very start, and I'll explain, every quote we get, every supplier, every transaction strengthens the algorithms, the engine that powers our marketplace, and continuous learning is a key growth, driver to our growth. But our customers are also embracing AI, so we have our manufacturing outlook, and we have now a majority of our customers who are using AI in many of their manufacturing decisions. And that trend will absolutely accelerate. It will also help right here, Nicole, American manufacturing to become more competitive. So as they apply more and more AI, American manufacturers will be able to grow their businesses, not just domestically, but also become more attractive to buyers around the world.
So people understand, Xometry is used by NASA, BMW, Fortune 500 companies. What is the NASA story? Do you continue to work with NASA going forward?
Yeah, we're working with, as you mentioned, some great names and lots of other, the largest companies in the world. And you're talking about everything from things that are in space. You're thinking about things that are in the air, medical devices, a lot of medical devices, think about robotics, automotive, so high precision parts, things that matter an awful lot to our customers and to their customers. Again, more and more of those customers are using the Xometry marketplace because it makes sense. Within seconds, you can decide what's the optimal way to manufacture something. There's lots of different options out there. We'll show you those options and show you the optimal one. What's the fastest and best way to get it? And then throughout the process of delivery, how do I reduce friction? How do I get visibility? Because I need to make sure I'm going to get these. All those things are being powered through our marketplace.
The buyer-supplier networks and getting everything, timing-wise, how is that going?
It's going great, and it's really a competitive mode for us. So when you think about all this data that we're building, and we're building every day, and as we're training our algorithms, you have to have the networks, the buyer network and the supplier networks that match those. So our suppliers, and those networks have been growing very robustly. And every time we add another customer, another buyer, another supplier, the algorithms get even smarter to figure out, hey, what is a good price for that customer, understanding what they're looking for. And then for the supplier, what's the optimal job to offer that supplier? What's really within their wheelhouse? Because for these hundreds of thousands of small manufacturers, they're really good at very specific things. The ability for AI to tease that out and then give them jobs that fit their envelope optimally, that allows them to optimize their profitability, to be more profitable, to invest and grow their businesses. So it's not just about giving them work, but it's also giving them the right work so they can become more profitable as well.
I also thought it was interesting that Xometry actually launched an app, a workspace app, where people can do a lot of this as well. So that's probably very helpful for people. Last but not least, what do you say when people ask you about the hyperscalers or the Mag 7? Are you integrated at all? Are you competitors? What do you say about that? Because when we think of AI, a lot of folks also think of the Mag 7 names.
Yeah, look, we are the leading marketplace for custom manufacturing. We offer something very unique, and as you mentioned, Nicole, we've been doing this since our founding. We've built up lots of data, these networks of buyers and suppliers. When you talk about other players in the AI ecosystem, those are great opportunities for us. We want as much of the manufacturing industry to go digital, so we're encouraging our customers, our suppliers, use these tools because that will enable them to act even more within the Xometry marketplace. Digital AI is not only good for American manufacturing, but it's also really good for Xometry.
All right, Randy, thank you so much. Randy Altschuler, CEO, founder, Xometry. Thanks for coming back to the show. It's great to see you, and congratulations, stock for your highs. All right, coming up, it's the Charles Schwab Stocks Report. So we get all the details, we'll break it down. It's all about the month of October. We'll take a look at trader activity, sentiment, what people are buying, selling, what you need to know. Joe Mazzillo will be right up.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're taking a look at Charles Schwab. It has the proprietary stacks report for the month of October. All the trader activity, sentiment from the past month. We welcome in Joe Mazzola, head trading and derivative strategist at Charles Schwab. So glad you're with us. And I saw this marks a 5-month rally for stacks. Marks the first 3-month stretch in which stacks growth actually surpassed the S&P 500 since 2021. What say you about this activity?
Well, let's talk about why we look at this, Nicole, because the sentiment is so important in market analysis. And you were just talking to your prior guest about AI, and AI just really kind of permeated into our stacks report, and that's where the sentiment is the strongest. That's where we're seeing buyers step in on pullbacks, and that's where we see the 3 biggest names are all kind of AI related. It's NVIDIA, Meta, it's Microsoft. And what do the 3 of them have in common? At least with NVIDIA and especially Meta, buyers continue to step in on pullbacks. And if we talk about the overall market as a whole, we got about a 4% pullback from the highs, and that's kind of looking pretty shallow right now as we're looking at today. We're definitely off to the races. So why do we measure sentiment? Because it gives us an idea of when buyers might step in if we do get pullbacks. And we've had shallow pullbacks throughout the rally all the way up from April. This one being, like I said, about 4% a pullback. But as long as that sentiment remains bullish, we continue to see buyers stepping in like we did this time.
I think, can we stay on the buys for a moment? You mentioned some of the names here. NVIDIA, Meta, Microsoft, Amazon, Palantir were in there as well. What's interesting is, so there's no question people are interested in AI and the Mag 7 and buying on the dips, but there was also a difference between Gen X and Gen Z. Gen X was willing to take more chances. Is that right?
Yeah, I thought that was interesting. I think it had maybe a little bit more to do with the kind of rotation in the stocks as opposed to maybe looking at kind of the generation breakdown in terms of risk. So I think basically what we heard or what we saw from our Gen X group is that on dips they were ready to buy. They kind of stepped in, and it's possible Gen Z might have been in some other products maybe outside of the 5 that we kind of talked about and discussed in terms of the buys, because when we look back over the last couple of months, there was one thing that was kind of permeating from the last few months, and that was a little bit more interest in some of the kind of maybe AI ancillary names, things like CoreWeave we had talked about I think a few months ago, and then also maybe some of the stocks that aren't traditionally what we consider part of Mag 7 names. What we saw this time is that the concentration of the buying was really heavily centered around those kind of Mag 7 names. Some of the other, a little bit more high beta, high volatile names that had kind of made their way into the list the last few months. It seems to be that maybe that's where Gen Z had rotated before, and those had a little bit more volatility to them this month. So there might have been a little bit of, hey, let's back up a little bit and see what's going to happen, as opposed to stepping in and buying with the same veracity that we saw from Gen X.
I also thought, it's interesting. I'm combining the ideas here, but the sentiment showed people were feeling bullish, 57%, and that would explain why people were also putting inflows into ETFs and mutual funds and fixed income as well, right? I mean, people are still feeling positive. They're doing inflows. They're investing. Is that right?
Yeah, it is, and I think it's really interesting because, Nicole, we talk about the behavior, which is the stacks, right? But then we also talk about the attitudinal survey. We do a monthly and then even a quarterly attitudinal survey with our traders when we ask them what we think is what they think the market's going to look like over the next few months and what they might be doing. And it's been interesting to kind of see the dichotomy between the two, saying, yeah, we're bullish, but right? We're bullish, but we're concerned about Washington. We're bullish, but we're concerned about valuation. We're bullish, but we think AI might be getting a little bit long in the tooth. But yeah, when they do get the pullbacks, they're still stepping in and buying it. So I think as long as the behavior maintains that bullish sentiment, the attitude, I think that's okay if that kind of backs off a little bit, as long as you continue to see the behavior. If that starts to rotate a little bit, if we see that start to get a little bit more bearish, that's where I might be a little bit more concerned about inflection points in the market. But it seems like we're still on that same path that we've seen in the last few months, and that's just when you get the shallow pullbacks, people are stepping in.
And I heard a lot of that at the Impact Conference too, Joe. A lot of positive, but market breadth this or concerns about that. I mean, people seem they want to be positive, but they're a little nervous. At the same time, we talked about a lot of the buys and the AI trends. When it came to what people sold, AMD, Apple, Tesla, Eli Lilly, and Intel. Tell me about the selling that went on. Any thoughts there?
What was interesting about those, Nicole, is they all had something pretty similar, at least in common, and they all had pretty big moves to the upside, at least the majority of them did. AMD had a 20% move in one day. It was actually up over 50% on the month. You continue to see the buy the dips, sell the rips type of mentality, and the sold the rip in AMD. Tesla, had a nice month in October before they started to pare back some of those gains, and Apple's at an all-time high. So those are three of the names that we saw the heaviest selling, and even Eli Lilly has rallied from 600 up to 950 or so where it's trading right now. Yeah, it's 960. So we've seen some big rallies in these names, and what I think is really interesting, and this is where I think once again there's some conservatism amongst this behavior. I don't like to use this term FOMO because I'm not seeing it. I'm not seeing the reaching. What I'm seeing is our clients rotate out of big winners, move into opportunities to buy some of the pullbacks. And then the other thing I would say that's a little bit different that I've noticed recently, Nicole, is that on the institutional side, and maybe you heard this at Impact, on the institutional side, there's been a lot more movement into some of the protectionist type trading strategies, buying puts, a lot of the hedging. And what we've seen a little bit more on the retail side is not only do they trim the winners, but then they use those as opportunities to maybe create option positions that will, replicate a bullish position. So it's almost like a stock replacement strategy. And that kind of just goes back to the education that we offer clients and what they're really participating in. If that's whether that's the webcast live event or watching your show, where they find out there's a whole other myriad of opportunities for them to participate in the market that goes beyond just buying stock.
So it seems that people are more positive than negative and still going along. I mean, for example, we almost saw the S&P close below the 50-day, and we had one guest who was talking about, he said, I think it's 133 days, and whatever. It's since April that we've been above the 50-day moving average, and there's a lot of little technical indicators that people are watching every single day. I'm going to give you the final word here, whether it's, the stacks report, the sentiment, or just the technicals on this market as we go into November, December, January. Seasonality also helps the market in that time generally, not always.
You got it. So I'll give you 3 points to kind of close our conversation on. You talked about the seasonality. We're right in the middle of November, beginning stages of November here, where yes, it tends to be one of the better months. Number two, sentiment is improving. We continue to see that, and I think what is interesting is that as we talk about this, April, the rally really began with the retail public. I think that institutions missed a good chunk of the rally, and even just look at some of the hedging behavior that I've seen over the last couple of weeks. They put a lot of hedges on coming into last week, and then now they're really starting to roll those out. I think they've got a little bit of catch up to do, so that could bull market moving.
Joe Mazzola, head trading and derivative strategist at Charles Schwab. Joe, great to see you. Thank you for all the details on the stacks report. And coming up, folks, we're going to take a look at the airlines now that the end of the shutdown is in sight. 41 days, but a lot of cancellations, delays. This may continue, doesn't sort of stop and turn around so quickly. So let's have a discussion on that. We'll be right back. Final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Blattis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome back to the watch list. I want to bring in our panel to discuss the airline sector, how the shutdown has impacted this group, and folks willing to travel. I mean, when we talk about thousands of cancellations and delays, Sean Cudahy, senior aviation reporter for the Points Guy, and Thomas Say, founder of the Sevens Report. Sean, I'll start with you. I mean, have you gotten some details on the number of cancellations and delays that we've seen over the past few days, particularly since the FAA announced the 10% cut down because they couldn't handle the volume?
Yeah, the cuts have actually been way worse than even expected going into the weekend. There was a lot of talk about the FAA required cancellations at about 40 airports nationwide. By my count, that was going to lead to about 800 to 900 cancellations across the country on Saturday and Sunday. We actually saw, when you add up the total number of delays and cancellations since Saturday, we're at about 25,000 right now, including almost 2,000 cancellations today alone. We are really seeing the staffing issues at air traffic control facilities kind of snowball in recent days. Obviously, a lot of conversation about whether the shutdown might end soon, but for the air travel industry, it can't come soon enough.
So how quickly do we turn this around, Tom? Obviously, you're seeing some of the same similar numbers. When you see thousands of cancellations and delays, how quickly, when the government shutdown ends, can they say, okay, back to normal? How long does it take to get back to normal, Tom?
I think that the big thing will be back to normal by the start of the holiday travel rush, which I think, in practicality, really begins at the end of next week and ramps up through the Thanksgiving holiday. A lot of the cancellation numbers are also being impacted by, sort of coincidentally, very bad weather all of a sudden. We had tremendous snow across the upper portion of the country and into Chicago and the Midwest, I think also contributed to a lot of these cancellations. So it's sort of a piling on. But I agree, as long as these flight disruptions are somewhat limited in scope, and I mean limited by being about, a week, maybe 8 or 9 days until we're back up to full force, they shouldn't be too much of a problem from an investment standpoint for the airlines. If they bleed into the Thanksgiving holiday, and again, we have to reopen the government. We don't think it's going to happen this week, but it actually has to happen. Then I think we're talking about a bigger problem if holiday travel is severely impacted.
And so at this point now, are they preparing to reload here, Sean? I mean, are they saying, look, by the end of the week, the government's going to be open, and here's what we should do, or not at all? They're going to wait until it's open and then try and do it.
Yeah, I think the airlines, their operational teams always have, contingency plans in place. At this point, there's just so much uncertainty.
That's been profits on
how this is
SBA.
going to go. I mean, I think we went into the weekend, with one expectation that the disruptions were so much worse. They're continuing this week, and really, let's remember, by the end of next week, next Friday is really kind of the unofficial start of that holiday, the traditional, or at least the more recent holiday.
$250 on SBX.
I think that it's a pretty, it's an uphill climb for airlines. I think there's a lot of hope that if the government were to open in short order here this week, that they'd be able to, generally bounce back in time for the holidays. But you've also heard the head of the nation's top air traffic controllers union say that, there's likely to be some lingering staffing shortages at, at air traffic control facilities. And let's remember that these facilities are already understaffed, going back to before the shutdown.
Look, we hope all the airlines do well. In the last 4 or 5 days, I flew Delta, JetBlue, and Southwest, all of which were on time. I was very lucky, and I got from point A to point B, so I'm very thankful to all of those places, and it went great. I did think Southwest had a completely different vibe. A lot of jokes, a lot of, bring your drinks in the cups. It was very different. I don't know that I ever flew Southwest. Is that how it is all the time? Which one's our best positioned airlines? Tom?
Yeah, I think from an enjoyment factor, I think you're spot on. I used to fly Southwest a lot when I was in college, and it was a fun airline to fly when you were in college because there was definitely a bit more of a party vibe. I think from an investment standpoint, though, really the United and Delta are for now best in breed. They have the most extensive network. They're doing the most business flying overseas. They are loaded with these little upgrades. You see the flight, the price of the seat, and that's not the price you're going to pay. But you get brought in, and then every little thing is an upgrade, which is obviously just more margin to them. So I think that they have performed the best. They seem to be a little bit better organizationally than American. And so from sort of a party standpoint, I agree. I think Southwest is definitely a good time. But from an investment standpoint, I think that United and Delta are where investors should look first.
I'm not sure I would call it a good time. They were super nice. I'm not sure. I mean, talking about sharks and things like that, I don't know. It was a little off for me. But I thought they were super nice and very kind, and I like that. Your favorites, quickly, Sean, you have 10 seconds. Your favorite airlines, I guess, when it comes to their success?
I think what I would say is that we've definitely seen Delta and United kind of lead the pack both when it comes to profitability and some of the customer initiatives. We see other airlines kind of playing catch up right now, it seems like.
All right, good to see you both, Sean Cuddy and also Tom Say. It was great to see you both, and again, I enjoyed my experience on all-night airlines. I'm glad I had very kind people working there during a difficult time. Hope everybody gets back to work, gets paid, and all goes the way we plan. Thanks for being with me here on the watch list. I'm Nicole Cuddy. Welcome to Coldest next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My boy
getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Ranger knows that if your alignment and chart keeping the lights on, you go to great lengths, and sometimes heights, to ensure the power is always flowing.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters.
Everything you need.
And I'm Sam Bottis, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll have earnings coverage for you with live reaction to reports from CoreWeave and Rigetti after the close. We'll also be joined by the CEO of Greenland Energy, that company, and to talk about oil trends and Greenland's potential in the energy space. And today's overlooked stock is Global Star after hitting an 11-year high today. But for now, Marley, take us through what you're watching today.
Sam, we saw Taiwan Semi and NVIDIA help boost the tech trade today. Taiwan Semi posted 17% revenue growth year over year. That was its slowest pace in nearly 2 years, but it was in line with estimates, so it isn't weighing on shares today. NVIDIA also giving a boost to the company. CEO Jensen Huang visiting Taiwan Semi over the weekend, and then telling media outlets afterwards he asked the company to boost production of its wafers to meet further demand. We also saw storage chip stocks rallying after gaining some bullish traction from a series of analyst upgrades. Loop Capital boosted its price target on both Seagate and on Western Digital, but SanDisk saw the biggest bump higher, with Barclays raising its target to $220, up from $39. Micron also moving higher in sympathy with those stocks. And Pfizer is buying Metsera in an updated deal valued at $10 billion. Shares of Metsera fell about 15% after the weight loss drug developer accepted that sweetened offer from Pfizer, ending a bidding war between Pfizer and Novo Nordisk. We'll break down all the terms shortly, but first let's take a look at where the markets stand as we near the end of the trading day on this Monday. The S&P trading up 1.5% higher right now at 6835.01. The Nasdaq more than 2% higher, 25,603.77. The Dow has added about 393 points, 47,379.65 right now, and the Russell 2000 trading up 1.33% higher at 2466.41. Taking a look at the dollar, though, mostly unchanged on the day, 99.46. Gold trading higher, though, at 2.75% right now at 41.2060. Crude oil trading higher as well, 60.12 a barrel, and Bitcoin moving 2% higher on the day, 106,140. Now I do want to check back in with Sam and see what top stories caught her eye today. Sam?
Well, Molly, we are seeing a bit of a mixed performance for airlines today, even as there may be light at the end of the tunnel for this government shutdown. Airline stocks had initially popped in the pre-market, but Some have been losing altitude throughout the course of the session, and it comes after a weekend of travel disruptions which appear to be dragging on despite the progress ahead of the critical Thanksgiving travel rush. As of today, more than 1,400 flights have reportedly been cancelled. Even when the government does reopen, air traffic controllers aren't expected to return to work immediately. That's what officials have been saying. President Trump taking to Truth Social today in the meantime, saying they must get back to work now, adding that he would recommend a $10,000 bonus for those who haven't taken time off. Now, amid the official data fog we've been in, we continue to track Fed speak. Fed Governor Stephen Mnuchin giving an interview today advocating for more cuts to avert potential softening of the economy. Mnuchin has been calling for bigger cuts, we know that, arguing that not continuing to ease would be short-sighted. Markets, of course, right now are pricing in just over a 60% chance that the Fed will cut in December. That number, though, has been coming down since that October meeting. Meantime, San Francisco Fed President Mary Daly saying that the Fed has appropriately brought down borrowing costs, but suggesting that they need to evaluate whether inflation could still pose a risk or whether we're about to see a productivity boom thanks to AI. She also offered a notable view in the Fed's debate on the rate cuts and the labor market, saying slowing jobs growth is likely down to a weaker demand rather than a supply issue coming from the immigration policy. For now, I'll send things back to Marley, who's with Jenny Horno in Chicago with some of today's top news.
So much, Sam. Yes, like you mentioned, joining us here in our Chicago studio, Jenny Horn, co-host of Next Gen Investing, to talk about some of these top stocks we're seeing on the move today. The first group I want to talk about is this group of health insurers. We're seeing a significant move to the downside pretty much across the board for any of the health insurance companies that are a part of the ACA marketplace.
Yeah, and I'm glad you mentioned that because it's really specific to the ACA. I think a lot of times you can hear the headlines and there's a lot going on right now, of course, with the government, Trump administration. So just to break that down, Trump is blasting the Obamacare subsidies as a windfall now for health insurance companies and a disaster for the American people, were his words exactly, claiming premiums have more than doubled since the ACA's passage. Now, he did propose redirecting federal funds directly to consumers to buy their own coverage, aiming to create competition and then help lower premiums. But framing insurers now as big bad companies and enriching themselves at these taxpayer expenses, and citing stock price gains of over 1,000% since the ACA was first implemented. So I think that this is an interesting stance, especially as we're seeing pressure to GOP negotiators as we see a broader push for healthcare overhaul. We've also seen, of course, some of the ties that he has and the administration has to various healthcare specific companies like Pfizer be very beneficial for a name like Pfizer, but it also does come at a time when the government shutdown still remains in a bit of an influx, and Democrats have pushed to extend ACA subsidies while Republicans have resisted. So I think this is an interesting shift where he's right now trying to add this, again, overall really pressure to these insurers, while also saying we're giving the money back to the people. We're taking on a different approach this time, which is something that, we'll see how that resonates with Americans, but it's not resonating so well with a lot of these companies. As we're taking it on the chin today, names like Centene down almost 9%, Molina Healthcare, CVS, United Health, all of these companies with insurance exposure seeing some massive pressure today. And again, in light of a pretty systematic change we're seeing for the entire U.S. healthcare space, or at least expected change.
Well, certainly. I mean, it's sort of an adjacency to this most favored nations approach we're seeing with a lot of these pharmaceutical deals, trying to lower the cost of drugs. Now we're trying to lower healthcare costs overall, or at least in theory, that's the idea here. But Centene, one of the biggest losers today, down 8 1/3% right now. Oscar Health, I think last I looked, was down 15. Molina Healthcare also down more than 6%. So some big losers there. On the heels of the announcements from the administration over the weekend on Truth Social. But staying in the healthcare space, we finally have a deal for the acquisition of Metsera, which has been in the courts and in the headlines.
And I mean, across the board, and definitely of the interest of investors because of the fact that it's been a buyout name as of late, or like an acquisition player, and more so better put. But Pfizer today buying its way back into the obesity drug game. Pfizer did win its fight to buy the company Metsera with an extra $1.7 billion and a little help from the Trump administration. So the new deal will mean Pfizer will pay roughly $65.60 in cash upfront for each Metsera share outstanding. It will also pay up to $20.65 a share in cash if certain development and regulatory milestones are able to be achieved. So that given that Metsera has roughly 105 million shares outstanding and the total per share bid was up to around $86.25 a share, that would value Metsera at just over $9 billion, or around $1.71 billion more than the original bid of up to $70 a share. So that then edged out competitor Novo Nordisk in the bidding war. But Metsera did say it determined that Pfizer was the better bid of the two over the weekend, saying that in light of recent circumstances, including the receipt by Metsera of a call from the US FTC regarding the potential risks that were actually proposed under Novo Nordisk's structure,
I believe AMD is slowing the gas.
Laws, that they're going with a safer bet, that being Pfizer. I think that simply put, you could say Pfizer is a US-based company, Novo Nordisk is not, and we know that the administration right now is trying to keep a lot of this in the house, but a win for Pfizer here. I know Metsera is down about 15%. Not abnormal to see one of the buyer or the buyee see some weakness on the session, but I think that this is a huge win for Pfizer that's been trying to get into this obesity drug market. It's expensive, it's difficult. They've had failed, like oral pill trials already. I think this is a great way to get in. If you can't beat them, you can buy into it at least.
Certainly, if you can't make it yourself, buy somebody else who's making it for you. And Metsera is an entirely obesity-focused company, so a big win for them. Metsera, though, down about 15% on the day so far. I want to pivot here to the storage chip stocks. We saw a series of analyst upgrades today, gave the whole sector pretty much a boost, but really three kind of in focus here.
Yeah, the biggest names in focus, I would say, were, maybe I'm just talking price performance, but Seagate and Western Digital here, both did touch new all-time highs today. Both have pulled back equal parts away from those highs. As we're down about 0.7% away from the highs in both of these names now on the session. But, Loop Capital with a price target that was even more optimistic, frankly, on Seagate, 465 from 350 with a buy rating. Also with a price target raised to 250 from 190 on Western Digital, of course, with a buy, saying that they see hard disk drive capacity demand moving higher now in 2026, with selling price increases for these higher capacity drives. They did also say the materially accretive economic dynamics for specifically Seagate and Western Digital are more durable, and they still remain in the beginning stages. So names that are up, Western Digital 287% this year. Seagate up 240 from them this year. We're talking names that are up 365% from their lows. Western Digital's up 500% from its lows. Hard disk drives. We were joking the day we said that maybe 50 times. Who would have thought that'd be really the precursor of, I've said it probably 69 times a day ever since, but really high bandwidth memory, hard disk drive capacity are critical pieces of AI capacity build, which has been fairly constrained. That's a concern amongst those that are trying to really assess how big the capacity needs to be. It's a very difficult question, though, but these companies operate in that very niche world, and so we need them if we need AI to grow to the extent that, of course, the market is pressing in right now.
It's been a wild ride to watch that. I remember the first day we talked about them at length, and it was like, how many times can we say it? And now they've emerged as this ultra important niche piece of the equation. SanDisk also more than 12% higher after they got a price target increase from Barclays. $220 their new target, up from 39. So
not even close.
Really significant upside potential here from Barclays they see in SanDisk. Want to pivot again though to our last one and stay in chips, but not in hard disk drives. Talk about NVIDIA and Taiwan Semi, particularly Taiwan Semi, sort of more to focus here.
Yeah, so Taiwan Semi disclosing some October sales figures, and we saw sales did slow to their slowest pace in over a year and a half. But while the growth was still in the double digits, there is still the expectation we could see more expectation or the upside ahead. We did see sales rise about 17% last month from a year ago. Again, slowest rate of expansion we've seen since February of 2024. But many are saying that it's premature to take that as a sign now that this is going to change the demand, or if any sort of shift at the narrative of demand for AI. Morningstar said 1 month of data is not enough to say AI demand is cooling. Daiwa analyst says seasonality is likely a contribution to this, and don't read too much into it. Wedbush's Day and Ives, of course we have to mention, our tried and true tech bull, did say that while bears will continue to yell AI bubble from their hibernation caves, we continue to point to tech CapEx super cycle that's driving what he still believes to be
streaming.
industrial
I
revolution
got
for
another
the next
hour.
few years. Now, Taiwan Semiconductor's results do come at a time when we've seen this renewed engagement with a very key customer, that being NVIDIA, which was underscored by CEO Jensen Huang, who did say that after meeting with their chair, C.C. Wang in Shanghai, they did emphasize the central role in their overall AI chip demand. They do continue to view this as a month-by-month, really overhaul as far as their chip orders are concerned, and while also needing this additional wafer supply. So Huang did credit Taiwan Semi with really powering a lot of their AI Blackwell chip production, and amid these U.S. export restrictions, saying that NVIDIA's success does really hinder on the strong wafer support as they continue to grow Blackwell. So basically saying that NVIDIA is tied so heavily to Taiwan Semi, that's, I'm sure, we're seeing a 3% move that's not really been at all wavering throughout today's session, because anytime you have Jensen Huang coming out and saying, hey, we need your business to be as successful as we need to be, I think that goes to show Taiwan Semiconductor's importance in the broader AI landscape.
Absolutely. I mean, we talk about them a lot about being one of the linchpins in the success of this AI build-out, but NVIDIA trading even higher. They're up more than 5.5% today, too. So, you know, a big move together. Nice to see NVIDIA in positive territory this week
Sure
as well. But Jenny Horn, thanks for breaking all of that down for us, co-host of Next Gen Investing here on Schwab Network. And I do want to check back in with Sam and see what we have coming up for the rest of the show. Sam?
Well, Marley, we'll dive into some trends you should be watching in the market and look at the technicals on gold, Bitcoin, and semiconductor chips. Market on close. We'll be right back.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange alongside Marley Caden over in our Chicago headquarters. Let's just check in where the markets are at, because we've seen somewhat of a rebound today for U.S. equities off the back of the somewhat weakness that we saw on Friday, particularly for the NASDAQ, closing out its worst week since April. So we have seen somewhat of a recovery there for tech stocks in particular, which are really driving this market higher today, along with consumer discretionary. Obviously, a few names to thank for that, namely NVIDIA, the likes of Tesla and Amazon, just to name a few. So we are 2% or so higher on the NASDAQ. The S&P 500 has reclaimed that 6.8 today. We're sitting up 1.5%. The Dow is higher, as well as the Russell 2000, which is participating in this broad rally here, up 1.3% for the major averages. And then we've got the US dollar, which has been sort of taking a bit of a breather in recent sessions, and that's why, of course, we have seen gold picking up. We've got crude oil, which has also reclaimed that $60 a per barrel mark. Bitcoin catching a bid today, as we mentioned. We're at levels of 106,000. So really we've been tracking the lack of momentum in the cryptocurrency, but it seems to be really trying to latch on to some bullishness right now. And the 10-year yield is sitting at 4.13. It's sort of been flip-flopping as we've seen the good data, the bad data, the dovish and the hawkish comments coming from these Fed speakers as well. So a bit of tug of war there. Technology, as I mentioned, higher on the day, 2.5%. So that's really doing the heavy lifting here. The communication services also putting on 1.2. Consumer discretionary also one of the outperformers there, 1.3% higher. Consumer staples is the laggard on the session, losing about 0.4% or so in the session. But we do have financials looking perky, up 0.6%. And if we take a look at the other sectors, we are all in the green there. Utilities are higher fractionally, so is real estate, industrial 0.7%, materials charging ahead to the tune of 1.1, and energy just on the line of 1% right now. So of course we are tracking those crude prices as well. And it's been a great day for mega cap tech off the back of what has been a really tough week for some of these names, particularly Microsoft and Nvidia. But we are recouping losses today, no doubt helped by Senator Jensen Huang's commentary that we need more chips. Certainly confirming that the AI story is very much intact for now. But all of this coming off the back, of course, of hopes that we could see an end to the government shutdown. So let's bring in Marley back to the conversation and welcome in our next guest, Gareth Soloway, who's the Chief Market Strategist of Verified Investing. Thanks so much for your time, Gareth. So you say the government reopening is a bull trap. Talk us through that.
Yeah, so the idea here is that when we look at the charts, and I'm a pure technician of the charts, is that we're seeing major negative divergences on the RSI in a lot of these semiconductors as they're making new all-time highs, like a Micron. You guys were just talking about STX, Seagate, as well as WDC. A lot of them, while they're making new all-time highs, are actually showing major negative divergences. In addition, we're seeing this kind of reopening enthusiasm, the buy the dip. Oh, the government's going to reopen, so everything's going to go back to normal. When in essence, what we're seeing is an economy that is driven 90% of GDP by the AI capex. And so, again, it's an economy that is running on zero if you take out the AI trade and the capex there. And that concerns me greatly. In addition, one thing about the semiconductors that I discovered is if you look at the weekly SMH chart, the semiconductor, the Van Eck Semiconductor Index, what we're seeing is that we're 102% above the 200 weekly moving average. The last time we saw that was exactly 102% above in 2024. The SMH corrected 40%. And then in 2021, we were exactly 102% above the 200 weekly moving average as well, and we corrected 45%. So I'm a little skeptical here. I don't think the government reopening is changing the trajectory of the underlying economy, the inflation impact, and also the insecurity that people are feeling about the underlying economy.
So Gareth, if the semis do roll over, does it take the broader market with it, or can some of the other sectors push in the block?
I'm in the camp that it takes generally the markets lower, mainly because there's so much weighting on the semiconductors. When you have Nvidia near $5 trillion and Broadcom $1.65 trillion and Taiwan Semi, as you were just talking about as well, and these companies make up such a huge percentage of the indexes now that if the market, if this group does roll over, they will take the overall indexes lower. Now, the interesting thing is I still think there will be winners, like a Pfizer, for instance, which has been beaten down, paying a 7% dividend. We have seen during sell-offs these periods where money, instead of leaving the market, it rotates into more defensive names. And I do think there are opportunities for investors to kind of move into those names to capture some alpha in the near term. But I strongly encourage people to be very careful here with the AI trade. 75% of the gains in the S&P in the last 2 years are just because of the AI trade and the AI stocks. And that's, again, when you're betting the whole farm here or everything on the farm in relation to the AI trade, one little misstep, one deep fake or deep seek, as we called it back then, I mean, these type of things can derail the market very, very quickly, and I do think the economy is only getting weaker.
You send me on Twitch?
Yeah, we've already had a lot of conversations questioning the AI valuation story and just sort of a lot of talk about the AI bubbles, etc. I just want to get your thoughts on, you know, as we continue to see this sort of risk on, particularly in tech. It's been a good day for Bitcoin. What is your take on all of this? Because, you know, we've seen this sort of not managing to gain the sort of momentum that we've seen in equities post 1010. It's really just been stuck in this range. What's your outlook for Bitcoin?
and that's an interesting issue here with Bitcoin. And what we're seeing here is that historically, I love looking at history to kind of predict the future here. In 2017, Bitcoin topped out in about, I think it was in December of 2017, and what we saw is about 6 weeks later, the stock market, which had been hitting new all-time highs since, but Bitcoin was not participating, we saw the stock market roll over. In 2021, Bitcoin in November of 2021 hit all-time highs and started to roll over. The stock market hit all-time highs until late December, about 6 more weeks. And so there are little things like this that make me wary, where when you have de-risking starts in the highest risk assets, right? So crypto would be one of those highest risk assets, and you see de-risking there, and eventually what it can be is a leading indicator for the overall stock market. And so we're right now approaching that 6 week period from when Bitcoin hit its all-time high. And again, I'm looking at the stock market with these other underlying factors that also are making me very aware we could be looking at a near-term top in the S&P and the AI stocks.
If we're nearing that 6-week Bitcoin peak and we're sort of approaching this technical danger zone that you're highlighting, if that pattern holds, how severe of a correction are you expecting for equities? Is it more of a pullback, or are we entering a full-blown bear phase?
Yeah, I would lean more towards a longer-term pullback here. Based on what I talked about in the semiconductors, we saw 45 and 40% corrections after being extended 102% from the 200 weekly moving average. And so again, I think you're looking at something where you could be looking at a top in the S&P that could last at least a year, possibly even further. And again, Bitcoin, we know Bitcoin, the beta, the volatility in that is much, much greater, and so that could even decline as much as 40 or 50%. Most people will be shocked by that now. We think that the markets can never go down. Retail investors have been programmed since 2020 to buy the dip because it's going to be a V-shaped recovery, but I'm not buying that here. I think, again, things have gotten way far ahead, and we're looking at a steeper correction than most people think, something that could last a lot longer. Having said that, real quick, I'll just mention, because we've been programmed as retail investors to buy the dip, you will see a lot of bounces along the way as the narrative kind of flip-flops back and forth from overvaluation and recession back to growth and solid economy. So I don't want people to think it's going to be a crash, but I do think it's a choppy sideways to lower move that could last 6 to 12 months in the market.
Just wondering then, what would be the catalyst for a correction then? Because as we've seen, any sort of shallow pullback, the dip buyers have stepped in to support the market. But, you know, with a lot of talk about what the Fed might do next, you know, the earnings have also been holding up, but there have been some questions around the capex, and then, you know, I suppose dependent on what happens with the US-China relationship as well. I mean, there certainly seems to be a lot of uncertainties. You mentioned that sort of black swan event too with DeepSeek earlier this year, which wiped, I think it was trillions off the stock market. What would be the catalyst then?
Yeah, what I'm looking at is more of a valuation issue here with the AI stocks. We've seen names like Oracle, right? Oracle had this monstrous backlog they announced. They went up 45 at the height, 45% on earnings. And since then, that stock has backfilled the entire move to back where it was prior to announcing that. And we've seen all these deals between NVIDIA and OpenAI and Oracle and Microsoft. And I do worry, again, and many people have voiced this concern, is that you're starting to see this kind of, you pay me, I'll give you this, and back and forth, where it's not, are you really creating real demand, or is it kind of a little bit more inflated? And I do worry about that. In addition, I think everyone's been predisposed to thinking the Fed will save the day by cutting rates, but we're not seeing inflation dropping to the levels yet that can really allow the Fed to come out and cut aggressively on the rate side. And I do worry also that, you know, at some point, the economy slips into, let's say, negative growth. Can the Fed cut rates aggressively enough to combat that with inflation where it is? So this combination can change the investor psychology very, very quickly. And before you know it, I mean, just look at the last couple weeks, how quickly the markets could decline. And now we're back up because we got one piece of good news about the government reopening, but it can flip-flop back and forth very, very quickly and turn negative again.
Gareth, we appreciate you taking the time to be with us to talk technicals. Guest Gareth Soloway from Verified Investing. Coming up next, we'll turn our attention to the mortgage space, where the Trump administration reportedly wants to allow crypto-backed mortgages. We'll dive into that next on Market on Close.
We're going to go looking at the future of technology.
Opportunities don't stop when the market day ends, so neither do you. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Shares of Coinbase moving higher today after Monness Crespi upgraded shares to buy from neutral with a $375 price target. The firm says it likes the setup in terms of news flow around the stablecoin utility in the real world, with a hunch that there's more to come from the December 17th event and the tokenization of equities. Taking a look at how some of the crypto-tied stocks are performing today, Coinbase trading up about 4% higher. Strategy trading down a little bit, about 0.9%. Mara Holdings down 0.75%. Block higher on the day, though, up 1.8%. And Riot Blockchain up about 1%. I do want to keep this crypto conversation going, though, but pivot to a different headline that we're talking about. Bring in our next guest. Joining us now, Scott Melker, the market analyst and host of Wolf of All Streets. Now, Scott, thanks for taking the time to be with us. You know, we're talking about the Trump administration saying that they would reportedly like to have crypto as a way to serve as collateral for your mortgage going forward. If this were to come to fruition, how much of a game changer would this be for both crypto holders and the housing market?
I don't even need to speak anecdotally. I can say what it would be for me, who's pursued a mortgage many times with the bulk of my net worth in crypto and unable to have it count towards my net worth when doing so. This is really a massive game changer for the 15% of Americans who hold crypto, many of them who say that Bitcoin is their largest holding entirely. I really think this is just welcome to the 21st century because this is so obvious. The mortgage lenders know exactly how to haircut volatile stocks. Bitcoin is now less volatile than most of the Mag 7 and large tech stocks. And just being able to show that you own it and have it counted as part of your net worth is so obvious. I don't think that there's any risk to this. I think that this is just a natural evolution alongside the mainstream adoption of crypto.
Scott, why do you think that lenders have been so slow to recognize digital assets as an overall part of someone's wealth?
They haven't gotten the directive from up above that they're getting now, right? I mean, these are not speedboats. These are obviously aircraft carriers, and they take a long time to turn. So unless you have Fannie Mae and Freddie Mac and the director like Pulte saying that you're going to count these assets, it was never going to be included. And like I said, this is just an obvious evolution of the policy. They already count volatile stocks. They know exactly how to discount these. They could count, you know, a 30% or 50% reduction in the value of your Bitcoin or crypto holdings to make sure that it's safe collateral. But like I said, just really, really obvious and just needed somebody at the top to take the initiative.
So, Scott, you just threw out like a conceptual working of how this might go, and I know you have a pretty in-depth knowledge of how this functions in terms of volatile equities. So walk us through how you think or how you envision this might actually play out. How would they value crypto holdings, and what protections would lenders have against price swings? Because, I mean, certainly just in Bitcoin, we've seen some massive price swings of late.
We have seen some massive price swings in Bitcoin of late, but as I said, it's actually been less volatile than most tech. It trades 24/7, 365. It's the most pristine collateral on the planet, actually. And you can see JP Morgan making an announcement that they're going to count Bitcoin and Ethereum as collateral in your portfolio and start to take it. This is the way that the puck is moving, and obviously that the housing market is just skating in that direction. I think they're just going to give it the same haircut that they do to volatile stocks. You know, every stock is not created equal when it's considered a part of your portfolio. When they consider a retirement account, they don't consider it in the same way because obviously it has to be liquidated at a penalty. Volatility is something that underwriters eat for breakfast. They know exactly how to do this. It's just a matter of literally counting the assets. So maybe the value of your Bitcoin will be discounted 50% when they add it to the number that's a part of your net worth.
So critics to this possibility are saying that crypto is just too volatile to back something that's considered as stable as like a 30-year mortgage is. What do you say to those kinds of people?
The exact same thing that we're saying here. It's 2025 and Bitcoin's not nearly as volatile. It's been adopted by every major institution. You have the United States government talking about a strategic Bitcoin reserve. You have a pro-Bitcoin president. You have pro-Bitcoin regulators. You have a pro-Bitcoiner at literally the top of every agency in the United States. You have Larry Fink talking about
Yo, welcome to the stream. How you guys doing today? You guys have a green day or a red day? Tell me down in the chat.
Bitcoin is the answer to the debasement trade. This is a mainstream asset that's reached exit velocity, and not counting it is nonsense. This shouldn't even be news. It should have happened long, long ago.
So let's talk specifically about the housing market. Do you think, A, this helps increase demand, but B, if so, it does help create demand, does that risk making affordability worse than it already is?
I don't think so. I think that it's, I would love to believe that it will be that impactful on the market, but this isn't going to affect enough people, I think, to affect the entire housing market writ large. What this does do, if you want an equivalent, imagine if you were holding Apple stock in 2005 and you didn't qualify for a mortgage, but you would if that Apple stock was cash and you were forced to sell it and take a taxable event to sell that and then show the cash. That's what people have had to do so far. So imagine selling your Bitcoin at a price that you didn't want to just to show the cash in your account 3 months ahead of the approval, taking a huge tax hit just to eventually buy the Bitcoin back after you qualify. It's just clunky. It's nonsense. But no, I don't think this will affect the housing market in general. I think it just makes buying a house much easier for a huge part of
Alright, the VIX is going up, so
remember, is the younger
be careful.
people who've been largely locked out of the
I mean, the market is showing both divergence,
now
so
this gives them a chance to own a home as well because they're so
just be careful.
And Scott, last question. Do you see this as potentially part of a larger shift? Like, might we next see crypto-backed car loans or crypto-backed business loans or margin lines?
We absolutely will, and there's already crypto-native companies that are doing all these things. There's already Bitcoin-backed loans that you can get on all of these assets. The thing is, it's just becoming mainstream now. But as I said, when you have announcements from the largest institutions on the planet, Citibank is about to get ready to custody these assets. Morgan Stanley just opened their platform to Bitcoin and Ethereum and crypto trading, and all the ones that I rattled off before. This is just going to become the norm because this asset class has become mainstream. So yes, I think that as led by MicroStrategy and others and Michael Saylor, we're going to see a full suite of financial services and opportunities surrounding Bitcoin and crypto that we see for everything else.
Well, Scott, we appreciate you being with us to talk this new headline about the possibility of crypto-backed mortgages. That's Scott Melker, market analyst and host of The Wolf of All Streets. And Sam, I'll send it back to you in New York.
Thanks so much for that, Marley. Well, coming up next, it's Options Corner, and Rick Ducat will join us to look at CoreWeave ahead of its earnings after the close today. That's coming up next on Market on Close. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we? No can do.
Look it out there.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Welcome back to Market on Close. CoreWeave will be in the spotlight this afternoon when the company reports earnings after the closing bell. Estimates are for a loss of 39 cents per share on revenue of $1.28 billion. Investors will be waiting for updates on large contracts announced with Meta and Nvidia and how they'll impact the bottom line. Shares are down more than 40% from June's all-time high right now. The stock finished more than 20% lower just last week. So that means it's time for Options Corner. Of course, joining us, Rick Ducat, our lead market technician here on Schwab Network, to talk about CoreWeave ahead of its earnings later today. You know, as we're talking about CoreWeave, you know, knowing how far they pulled back just recently, it is an interesting setup going into their earnings report. You know, as we look at them against the market more broadly, you know, obviously a much more volatile performance, but outperforming.
Volatile is really fun when it's going the way you want it to go. You know, the past couple of weeks have been perhaps a little bit more of a different story here. But really, make no mistake, still up over 160% during the past week. Very strongly outperforming not only the XLK tech sector ETF here in this blue teal color, 43%, S&P 500 up about 22.5%. CoreWeave is a kind of a difficult company to make apples to apples comparisons to, though. What does CoreWeave do? Basically, they have huge supercomputer clusters. They let other businesses rent their processing and computing power rather than building out their own costly, difficult to maintain and make, computer centers of their own. So a couple other companies, Nebius Group, NBIS, Applied Digital, APLD. By this measure, CoreWeave is the extreme laggard. These stocks are up more than 400% or so. So really, it kind of all depends on your perspective with this type of situation sometimes.
And an interesting timing setup too, because we've got CoreWeave coming into earnings right after the market closes. Nebius has their earnings tomorrow, so they will be back to back in terms of as close a competitor as you can find. But when we look more specifically just at CoreWeave into their earnings and what their technicals are showing us, you know, I can already see from your trend lines that we are in a bit of a downward trend here, but certainly not as steep as we've seen in other charts.
Yes, and also one that has held on to a key supportive level here. Indeed, though, we are trending downward here. We had our highs 187 all the way back here, connecting the subsequent highs in this area during the early months of October, or the early days of October, excuse me. And then more recently, a steeper downtrend with our blue trend line here, beginning with this last high point that failed to take out those previous highs in early November. But crucially, though, if we look at our green line here, 105 approximately, 104.90 to be more specific, low points, high, high, and then low once again. That's about where we stabilized in terms of our closing price. For now, we're hanging on to this level. So this seems like a key point for the bulls to hang on to if they want to perhaps regain some kind of upward trajectory here. If we were to move lower, these old lows here near 85 stand out as a repeated floor. A quick glance at some of our other studies here, we can see that RSI has seen a significant interruption here. We are below the 50 midline. Our green trend line has been broken as well. We're below two of our simple moving averages here, our 20 and our 50-day simple moving averages, aligning together near about 126 or so.
Yeah, and trading about 104 right now. As we come into the earnings event, what are the analysts saying? What's the outlook here?
Not a lot of new information. A lot of what we saw was analysts reiterating their prior calls. The most recent new information was Evercore initiated coverage on September 30th with an outperform rating and a 175 price target. But it kind of runs the gamut here. Price targets kind of all over the map. Mostly hold to buy for the most part. I didn't see any sell ratings here, but really a broad range here. Targets before were as low as 128. Now the range is more about 140 to 165 or so is what they seem to be looking for in near terms.
And as far as options activity on their earnings day, what's the volume look like?
Pretty heavy. 305,000 options trading hands today. The sizzle reflects about 1.7, 1.8 times the 5-day moving average, 62% calls or so. If we were to look at the general range for open interest for the November 21st expiration, 11 days out here, it comes in on the call side between about 92 to 200. Very wide range here. The highest level was 23,000 or so. The put side, the price has moved too quickly. It hasn't really caught up here. So that range is tops out near 130, so 65 to 130. 95 was the highest level, 27,000 open interest there.
All right, well, Rick, thanks for being with us to break down the action we're seeing on CoreWeave ahead of their earnings after the bell. I do want to check back in with Sam, though, and find out who we're talking about for overlooked stocks today.
Well, Marley, George Sillis has his eye on Global Star heading into the close as shares have hit an 11-year high after a price target hike there. And we'll break down the news on that name and what you need to know about the company coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or
Market bullish, lift
head over
bullish,
to schwab.com/coaching
bullish.
and start
Everything bullish.
learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going?
First day, so.
Sometimes,
Next. Try to get?
you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets in the Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Bardis, live from the floor of the New York Stock Exchange. It's time now for overlooked stocks. Shares of Global Star rallying today to its highest level in 11 years after B. Riley raised its price target on the share. So I'm joined by George Sillis, senior markets correspondent, to get us across this one. What are you seeing as far as what the analyst has said behind this price target boost, George?
I think there's some larger secular catalysts, to be honest with you, Sam, with companies like Global Star, which is really a prominent player in the mobile satellite systems or communications space. So they provide satellite communications using low orbit satellite constellations, things like GPS trackers, like emergency alerts. If you have an iPhone, you use Find My Location services. That's actually run through GSAT. And they have about 60% of the total sales actually come from Apple, which is quite large. But nonetheless, I think what's happening here, secular-wise, is low orbit satellite constellations are now becoming the go-to when it comes down to direct-to-cellular connectivity for communications versus the traditional tower system that is used through 5G and 6G networks now as they're evolving. That's companies like Verizon, AT&T serve the marketplace. If you look at this last year, the company's performed exceptionally well. It's up about 95% over the last 5 years. It's up close to 700% because of these secular tailwinds. And we know that, of course, companies like Starlink, which again, work through SpaceX, through Elon Musk's other subsidiary companies, are really moving aggressively to, of course, provide broadband services, non-traditional wise, in other words, using satellites. So the communications technology using satellites is becoming more rapid and ubiquitous. And companies like Apple now have services, including their SOS services, which allow for direct-to-cellular text communications in emergencies. And these are, again, used by not only the private sector, but also the public sector.
Yeah, it's interesting. I've been looking at across, some of these services, as you say, that it provides to Apple with,
Alright, be careful at this time. This is a rejection up there.
As well, to actually be run by Global Star too, as far as that satellite network is concerned. So it's a pretty small player in the scheme of things, but some pretty big customers and partnerships here. I mean, I've just seen, as far as some of the analysts that cover this stock, there's not a lot out there, just a handful, but most of them are in the buy camp. So it seems to be doing something right as to, why it's rallied up almost 90% year to date. So what have people been saying as far as, how it sort of stacks up against the rest of the bunch?
Yeah, so it's a good question. I think there's a lot going on here. I mean, first off, if you think about the nature of low orbit satellite communications, companies like Starlink, Amazon through Blue Origin are actually moving aggressively into broadband. If you look at Iridium, which competes with GSAT, also Viasat, these are companies that actually have low orbit satellite communications for devices, things like iPhones, for instance, as well as iPads and so forth. They also provide services to, of course, things like government needs, forestry services, and things of that capacity. But nonetheless, if you look at last quarter, when the company reported earnings on the 6th, they actually posted a 1 cent profit versus a 3 cent loss. So anytime you move from losses to profits, close to the break-even, you do see a continuation potentially in the trend, is what we're saying. If you look at B. Riley, they actually increased their target to 75 from 60, maintain a buy rating. They actually see something more compelling because, like I mentioned, if you look at Starlink, SpaceX, they don't necessarily have direct-to-device communications that GSAT does. So maybe they're speculating that there's a potential tie-up between Starlink and GSAT going forward. And that actually might, if you think about it, because Apple is the largest customer of GSAT. They have 85% of the capacity for GSAT's, this Apple now, technology network. Now that actually might bind Tesla together, using Starlink, alongside Apple. So I'm just saying that there's maybe a bigger story here behind this call by B. Riley, which seems to be more of a tie-in or a binding element, more of a strategic alternative to the business, maybe bound up with companies like Starlink.
Got it. All right. Well, the street likes it. GSAT sitting up at almost 15% in trade today. Thank you so much, George Sillis, for getting us across that name. I'll send things back over to Marley in Chicago for now.
Thanks to Sam and George. We're nearing the end of our market session. That, of course, means we'll be bringing Kevin Green in to break down the levels he's watching on the S&P 500 as well as today's action. That's next on Market on Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at SchwabNetwork.com.
We Rejection.
Opportunities don't stop when the
Rejection.
market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
We're back here on Market on Close. I'm Sam Viders here on the floor of the New York Stock Exchange alongside Marley Hayden in our Chicago headquarters. There's just a few minutes left in today's session, so let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the session. KG, what levels are you looking at? The S&P 500 right now as we approach the finish line for today. We saw a nice rebound certainly for the benchmark today.
A nice rebound when you're looking at the S&P, NASDAQ, as well as the Russell 2000. We have around 66% of the stocks in the S&P in the green going into the close, which is actually really good performance, and it kind of lines up with what we had seen actually on Thursday and Friday, where market breadth was actually expanding. And if you're kind of looking at going into the close, 6830 is really that level that I'm actually focusing on. We've been kind of hovering around here for, let's see, almost the past hour or so. I'm not sure if we're going to be able to maintain above that level, but that's where you do see a significant amount of calls being sold for today's session as well. To the downside, 67.75. I'd be very shocked if we do actually see any type of pullback to the downside here. But we are melting up, and we are seeing broad participation, at least for now. We are going to see a follow through day for tomorrow as well as Wednesday. If we actually look at a couple of key charts to really try to focus and try to hone in on where could we see an area of resistance. If we look at the E-mini S&P 500 futures chart, I think this is actually a really key one. We had this volume-weighted average price pretty much since October 28th, and that's really kind of marking where we started to see peak when it came to the highs here. We saw this flush to the downside on Friday. We had a decent hammer candle if you're looking at the S&P 500. This is more of a fly type of candle, but it's still, for the most part, actually really bullish for the market. That's that Friday candle. And obviously we have a follow-through day today. And are we able to close above this average volume-weighted price here, anchor volume-weighted average price here for the E-mini S&P 500? If we are able to close above it, that's actually really bullish given the technical setup. And maybe we could push higher to the upside here, at least for now. The RSI is still making lower highs, so we still maybe have some room to go when it comes to price momentum. But this is the first step of seeing this bullish trend. Now, if we can actually go to the NASDAQ 100 chart, a little bit different. You're seeing the same type of technical setup for the most part, but we have something now called a morning star pattern, which is a bullish reversal pattern. It's the 3-candle reversal. You know, flush candle, you have a reversal hammer candle, if you will, and now you have a follow-through candle for today, which is in the green. But if you look at the NASDAQ 100, this is the tech stock, these are communication services, technology, what have you. We are not above that anchor volume-weighted average price. In fact, you could still make the case that sellers could actually step in at this point in time, even though the S&P 500 is actually above that level here. So I think you would be cautiously optimistic that we can continue to make higher highs, but could this also be a part of a three-way pattern to the downside? That could also be the case, just given the landscape and the environment that we will have in terms of economic data. So technically speaking, good day. Breadth-wise, really good day. Like to see more participation, but I don't think we're completely out of the woods yet when you're looking at this breakdown in the last minute.
You're highlighting these two charts with the E-mini and then showing us the NASDAQ and some of the potential divergence you're seeing, both bullish but some potential issues there. What kind of catalyst are you looking for, to Does the shutdown have to end? Do we have to get some official government data?
Yeah, I think the government shutdown is probably already priced into the market, just given the reaction that we are seeing today. The earnings announcements, they could be a key catalyst, but a lot of the earnings that we will be seeing over the next week or so are they're not really going to be that part of the AI trade, to say the least. I mean, we will talk about CoreWeave later today, but obviously they're a little bit of a unique player when it comes to this space, more of a company that actually is kind of taking on the excess demand, if you will, within that market. I think what we're really trying to focus on over the next couple of weeks is going to be the economic data from the government. It's going to be very volatile, and I think that's going to be the key thing to drive us either higher or lower. And if we actually have really weak economic data coming from the government, especially on the labor front, that actually would improve the odds for us to actually cut rates, not only in December, but potentially in January. I think that's enough for us to try to have a holiday rally to the upside here. So I don't think the AI worries are out of the picture or out of the question yet, but I do believe that we have a relief rally taking place right now.
Well, at least the AI valuation concerns have been brushed aside for now, at least, as we somewhat see a relief rally playing out here in the markets as one gets called a potential bull trap, but we'll take it because we have certainly seen a rebound in stocks today.
That's it, guys. How'd you guys do? I printed on XBX on SPY calls.
Nice recovery there for U.S. equities. We've got up arrows across the board there. The outperformer being the Nasdaq, as KG mentioned there. We've got 2.2% higher for the tech-heavy index there, 25,611 right now, as very much recouping the losses that we've seen last week. Its worst week since early April for some of those tech names. A tough week for some of those mega tech stocks. The S&P 500 closing out the session 1.5% higher. We reclaimed 6.8 today. We're at 68.32 as we rounded out the session there. Dow Jones 0.8% higher at 47,368, and then the Russell 2000, the small caps, also participating in this broad rally today, 0.9% higher at 24.55. This was your scorecard for the sectors today. Technology very much doing the heavy lifting there at 2.5% higher, thanks to names, as we mentioned, like NVIDIA, some of the mega cap tech off the back of Jensen Huang's comments, and a few of those concerns perhaps easing or abating off the back of some of the, I suppose, encouraging signs and developments from the U.S. government shutdown potentially coming to an end. Communication services was higher, so was consumer discretionary, thanks to a few names like Tesla, Amazon, namely. Financials were higher. Consumer staples, though, the underperformer, the laggard on the session, down around 0.5%. Utilities were up marginally. Real estate just fell below the line in the final hour, though. We were slightly higher, but pulled back at 0.2% to close out the day. Industrial 0.7% higher. Materials are having a good day, up 1.2%, and energy tracking those crude prices as we reclaim that $60 a barrel there at 1% for the sector. Mega cap tech, here's your scorecard for that. NVIDIA absolutely flying today, 5.8% higher. This coming off the back of the fact that Jensen Huang has been talking about the fact that we need more chips coming from the likes of TSMC, of course, as we've been breaking down for most of the day. 0.4% on for Apple. Amazon 1.6% higher. Alphabet, a very good day there, up 4%. Microsoft, finally a positive day for Microsoft, up almost 2%, and Meta having a good day as well, 1.6% higher. So that was the rundown for what we got for this Monday. As I said, a nice recovery there, pretty much up arrows across the board, except for just a couple of marginal losses there for the sectors. KG, what were your takeaways?
Yeah, I mean, I think you did a phenomenal job with actually kind of explaining what happened today. We did see a bounce back in NVIDIA, seeing a massive candle to the upside here. Let's see if this is going to be able to hold. Once again, we have the environment and the technicals in place for us to continue to move higher here. If we get that broad-based participation, I think that's going to be key here, at least for now. And if we do get something that's unexpected, maybe we see volatility kind of remain higher. But the VIX right now is signaling that it wants to move a little bit lower. I'm not sure if we're going to get to that 15 handle or even a 14 handle there. But even if we come back to, let's say, a 16 handle, I think that's actually going to be conducive, not only for intraday traders, but also investors looking at trying to pick up some of these names. So overall, a pretty decent session. And we'll see the end of all 3 days tomorrow. I think the biggest concern we have is if we have re-rating of Dow going higher, and we pull back and try to retest our 50-day moving average.
And in terms of commodity action we saw today, you saw Bitcoin trying to poise a pretty significant recovery, up more than 2%, about 106,000 right now. We saw oil trading higher. What were some of your takeaways in the commodity space?
looking at the oil trade, we did see a fade on the intraday basis, but some buyers really did try to step in here. I think we're still below that $65 level, which is key when you're looking at it from an economic indicator standpoint. So a little bit concerning. We haven't had some aggressive buyers really stepping in as of yet, but maybe that's going to take place over the next couple of weeks. It's big gold, silver catching a bid, and kind of catching a little bit of catching some life here because of this risk volatility market. I think is also kind of key. And then you're just looking at the commodities. If you're looking at grains, I think the grains are maybe higher on optimism of China relaxing a lot of these restrictions within the market, as well as focusing a lot of our agricultural products. So the commodities, for the most part, I feel are pretty decent.
It's interesting, KG, and I suppose we were talking about this with our earlier guest. It just seems like one little positive bit of news helps these markets sort of march higher. I mean, I know that we've had a lot of other pieces of information with Jensen Huang, very influential, talking about the fact that they're also seeing some strong demand there for the black whale too, not to mention a story that perhaps has flown under the radar a bit, that China and the US are going to sort of ease off on their port fees as well on each other's ships, which seems to come out of the agreement between Presidents Trump and Xi as well, so maybe helping out some of the sentiment there as well. But what do the technicals tell you about just how sensitive these markets are to any sort of slight bit of good news, even if we haven't seen a sort of material impact from the government shutdown? Just they're holding on to hope.
Yeah, the market's definitely, I mean, look, we've been buying the dip for the last 2.5, 3 years, and it seems like the market's going to continue to do that, and that's what we are seeing today. And you hit that key 50-day moving average for the S&P as well as the NASDAQ. Not surprising that we did see some buyers really stepping in. If we were going to roll over, you would see a consolidation for maybe 3 or 4 days before we roll back over and try to retest that 50. I think going into the remainder of the year from a seasonality standpoint, we still see the market looking higher.
And I want to break in here with both of you. We've got some earnings coming across here. Rigetti Computing coming in with a third quarter operating loss of $20.5 million. That's higher than the estimate calling for a loss for 20.1. Their revenue coming in at $1.9 million for the third quarter. Estimates were looking for $2.17 million, so also a miss there. They're also reporting a third quarter loss per share of 62 cents. Estimated loss per share was about 5 cents, 4.5 to 5 cents. So a pretty significant miss across the board here. Rigetti not moving as violently as I expected to the downside, trading down about 1.5% right now. But, KG, as we're looking at these numbers, they weren't expected to be great, and they are small numbers, in terms of their revenue numbers, but a significant miss here.
Yeah, I mean, if you're kind of looking at a trend for today, a lot of these quantum stocks did not catch a bid. That was one area of the market that was actually still fairly weak. Now, Rigetti, I'll still call it pre-revenue. It is making revenue, but it's very small, and a lot of that is coming from government contracts and some consulting work that they were doing. So really not surprising that that number obviously is coming in fairly light, and their expenses continue to outpace as they are continuing to spend money on CapEx and trying to expand the quantum space as a whole. This is a stock that a lot of investors have looked towards as maybe the next NVIDIA over the next 10 years or 15 years or so. So they know the near-term headwinds that they're going to be facing, but if the headwinds have a material breakthrough, this could be one that does capture a lot of attention, especially for the cap tech companies. So the earnings are really not surprising. I think the conference call and their conversations around new contracts and new funding from the U.S. government and the Department of Defense probably would be the major catalyst for the stock to move higher after hours.
And Sam, I know you've had a lot of conversations in this quantum space about Rigetti and some of its competitors. Knowing how small their revenues are, how important is it on the conference call for them to have some significant new large contract or even align on a significant new large contract based on the notes that you've read and the conversations you've had?
Yeah, I've been having a lot of conversations around this, particularly because this sort of falls in the bucket of what has largely been seen as more of a speculative trade. I mean, a lot of capital has been flowing into this, basically on the thinking at least that's going to be predicated on what is going to be, revolutionary technology. But I mean, this is early days. This is early innings for quantum computing right now. So I think you're right that we do need an update, particularly certainly on the contracts, particularly with regards to the government. stock has been catching a bid throughout the course of the year on some sort of incremental technological breakthroughs that it's been making too. It has previously said, as if my mind serves me correctly, that it is on track to actually meet its 2025 goals as far as some of its technology is concerned. So no doubt the call will be interesting as to, how many people sort of hold it accountable for that and to that, and whether we do get an update very much on its strategic positioning as well, as we do look across this space and, have been paying attention to the IonQs and all the other ones in this space as well.
All right, and KG, final thoughts as we're about to get CoreWeave here. I just want to remark that they did now just put out their adjusted EPS number. When it's adjusted, their quarterly loss of 3 cents per share does beat the analyst estimate, which is calling for 4 to 5 cents per share. So they're going to record not both the top and bottom line miss on those adjusted numbers. But final thoughts here, KG, as we jump over to CoreWeave in a second.
Yeah, I would agree. Look, very a small market for now. It's going to expand. You also have to be mindful. There's a lot of major players within this space as well, from Intel's, IBM's to Google. So they do have a niche in the market. They are trying to work with the with the feds, but it's going to be a long time in order for us to see some really meaningful technological advances when it comes to this company or a lot of the other small ones.
All right, so let's jump over to CoreWeave here now and take a look. Their third quarter loss per share coming in at 22 cents. That's considerably better than estimates, which range anywhere from 39 cents to 57 cents for a loss there. They also posted a net loss of $110.1 million. The estimated loss was supposed to be $299.6. So a considerably better performance there as well. EBITDA margins coming in at 61%. Expectations were calling for 62.3. Their operating income at $217.2 million, better than estimates calling for 177.2. They are not putting out any guidance I can see just yet, but as their adjusted EBITDA coming in at $838.1 million, better than the $821.7, which was expected. Revenue for the third quarter coming in at $1.36 billion, better than the estimates calling for $1.29, and we're seeing that reflected in the price action here. Shares up more than 3.5% already, but this is a highly volatile stock, as we talked about during Options Corner with Rick Ducat. Options market pricing in about a move up plus or minus 14% here, so certainly not anywhere in that territory. KG, as we're just getting our first look at their third quarter numbers, what are some of your thoughts here? We're now making a reversal also to the downside.
Yeah, their backlog of orders as of September 30th came in at $55.6 billion. I think the stream is actually looking for $60 billion, so they missed by about $5 billion on that. That's including all of these orders that they're getting from, these deals from the NVIDIAs of the world and OpenAIs. And so this is going to be a volatile name. Once again, this is a company that is trying to build out and spend out a lot of money when it comes to building out these data centers, purchasing, we can call it leasing, right? Leasing some of these NVIDIA chips, if you will, is an interesting deal that they have there. But they are going to really try to fill the capacity or the overcapacity from the ones that are hyperscale. That's where you get a little concerned if you're looking at the long-term trajectory, because as it becomes a commoditized business and you start seeing a lot of these players really pushing prices to the downside, you can squeeze margins over the long term. But for now, there is still an investment cohort that is out there that's very optimistic when it comes to this name. This is on kind of the fringe elements, if you will, when it comes to the AI trade in general, similar to what we have for Oracle, building out a lot of capacity, because they see demand right now, but are they going to overbuild in the future, and is that going to actually impact them? For now, it's not a concern. That's something to keep on the radar.
And Kevin, we are seeing some whipsawing now. We are trading almost 2% higher now after just while you were talking. We completely reversed course here. What do you expect to be the most major catalyst on the call in terms of what CoreWeave can say to determine how their price action might look tomorrow?
Yeah, remaining performance obligations, that's it. Because at the end of the day, they're either going to spend money, and if they're able to spend money, or if they're going to spend money, they got to prove that they actually have a backlog of orders to backfill that. And if they don't, and they don't have that proper balance, that's where you have a problem. That's where you have I don't really call it a meta problem, but that's where you have an Oracle problem. You start tapping in the debt markets, maybe additional offerings, like in the equity space, that needing shareholders to raise cash in order to build out these data centers, but if you're not getting the orders, that becomes a problem. Right now, that is not an issue, so I want to be really, really clear about that. But it is concerned that a lot of analysts do have over the next year, 2 years or so, the sustainability of these business models for these companies that are taking over capacity from the hyperscalers, because that's exactly where they're getting the demand right now. But at some point, are those hyperscalers going to be able to enough in order to meet all the demand for their internal clients, and that's eventually probably will happen.
Yeah, certainly an ongoing question that a lot of people are asking. Kevin, we appreciate you being with us to go through these earnings with us for CoreWeave and Rigetti Computing. CoreWeave now trading up about 1.2% after they posted better than expected results. Rigetti trading down about 2.5% after EPS beat, but a miss on their revenue. Coming up, we'll dive into the energy space with the CEO of Greenland Energy Company. Stick around. Market on Close. We'll be right back.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at SheldronFrost.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumers, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. And that could certainly be a short to near term